Ladies and gentlemen, this is the only trading strategy that I'll be using in 2026, and I'm going to teach you the entire strategy in this video. Okay, so the first thing we need for this strategy is higher time frame IRL. IRL is internal range liquidity, which is also a fair value gap, right? So IRL is a fair value gap. Number two, we're going to be looking for lower time frame confirmation off of that IRL, a higher time frame IRL. And number three, we need to identify our draw on liquidity. And number four, I'm going to teach you in the video. So don't worry about any of these. I'm going to teach you everything. You will not be confused after watching this video. I promise you that. Just hit that subscribe button. Just hit that subscribe button right now. We need to get to 200k subs because I'm giving away this information for absolutely free. People charge so much for this, bro. You have no idea. So before I start, I want to let you know about myself. I am a six-figure funded trader managing multiple profit accounts. I've got multiple payouts, and I've helped more than hundreds of students get funded, get consistent payouts, and they're getting funded every single day. Okay, and a proof is required because you don't want to watch someone who has no proof, right? But here I am. So many people have benefited from my free videos on YouTube, and that's the goal, guys. That's the goal. And in this video, this is the model that I'll be using in 2026. So first thing first, what we want to do is wait for 9:30. So we always going to be trading from 9:30 till 11:30 a.m. New York time. So make sure your time zone is set to New York over here, so you don't get confused about the timings, because most of the volume comes in after 9:30 a.m. Okay, and you want to trade with the volume. You don't want to trade a choppy price action because you'll get wrecked. So what you want to look for, first of all, is identify your draw on liquidity. So the very first step is identify your draw on liquidity. Now this could be Asia high or low, right? It could be London high or low. It could be also previous day high and previous day low, right? It is very simple. I'm going to teach you how you can identify this, and also you can identify equal highs, right, and equal lows. So this is the most important liquidity that you want to identify as a draw on liquidity. Okay, so let's say that if we have taken out the Asia high, so let's say this is the Asia high, right? Now and we have let's say this is the Asia low. Now you know that the draw on liquidity is going to be the Asia low. Okay, so and similarly, if you have taken out the previous day high, you know that the draw is going to be the previous day low. And similarly, if you have taken out the London high, the draw is going to be the London low. And let's say these were equal highs, the next draw is going to be equal lows, right? So with that in mind, here's the strategy. So let's say that we have taken out London high. Okay, let's say we have taken out London high before 9:30 a.m. New York time. So let's mark that out, and we have London low down there. Now after 9:30 a.m., right, you want to see a 5-minute fair value gap form towards your draw on liquidity. So after 9:30, you're waiting for price to create a 5-minute fair value gap towards your draw on liquidity after 9:30 a.m., right? So a 5-minute or a 15-minute fair value gap. So first you want to look at the 5-minute. If there's no 5-minute, you can look at 15-minute to see if there's a fair value gap forming towards your draw. Now, once a 5-minute or 15-minute fair value gap forms after 9:30, you want to wait simply for price to tap into the higher time frame IRL, which is your 5-minute fair value gap. So wait for price to tap into that fair value gap. And then what you want to do is drop down to 1-minute time frame. Now here is when our lower time frame confirmation or entry model comes in. And this is very important. This is the most important part of the strategy. Okay. So let's say this is the 5-minute fair value gap. Okay. Now you are on the 1-minute, price is inside the 5-minute fair value gap. You want to look for inversion setup. So this manipulation leg on the 1-minute, you want to identify all the fair value gaps. And if there's only one, you want to mark that out. Okay. Now the next step is make sure on the 1-minute price has swept some form of liquidity before tapping into the 5-minute fair value gap or 15-minute fair value gap. So this could be 1-minute high, right? And then you simply wait for price to close below this 1-minute fair value gap. Okay, so that is your inversion. And inversion is when we have a bullish fair value gap, but then price disrespects the bullish fair value gap and closes below it. So now it is inversed, right? and that becomes a resistance for price. So price will not go above that. So once price closes below this IFVG, you want to take a short position right away. And you want to put your stop above the high. And you can target the drawn liquidity, or you can go for a 1-to-2 fixed risk reward ratio. And I've seen that I've gotten more success when I go for a fixed risk reward ratio, right? And then the risk management is very important for this strategy, okay? So you want to go break even as soon as the closest liquidity after your entry is taken out. So this is the closest low after your entry. So as soon as price hits this level, you're going to go break even, okay? And this is going to save you a lot of times, all right? And then price will eventually push down, and then it will hit your TP. Very simple stuff, guys, okay? You just want to identify your draw. That is the most important thing, okay? Now, if you invert the chart over, we have taken out the London low. We have the London high. We probably have the Asia high here as well. Or we have taken out, let's say, the previous day low, right? Or we have taken out like equal lows, or a higher time frame, like 1 hour or 4 hours time frame, significant swing low or swing high, right? Then you want to wait for a 5-minute fair value gap to form after 9:30 towards your draw on liquidity. Then you want to wait for price to tap into that fair value gap, which is this over here on the 5-minute. Then you wait for a 1-minute inversion, okay, above this fair value gap. Now, let's say that there are 2 fair value gaps in this manipulation leg on the 1-minute. So what you want to do is wait for both of them to get inversed, okay? So if there are 3, you're going to wait for all of those 3 fair value gaps to get inversed. And once that happens, you're going to take your entry and you're going to go for 1-to-2, and that is pretty much it. So now I'm going to give you guys a lot of examples, and then I'll end the video. All right, guys, so here is example number 1. So you can see that we have taken out the Asia high over here, and now after 9:30, we have created this fair value gap on the 15-minute time frame, not the 5-minute, okay? So you want to mark that out, and then let's drop down to 1-minute time frame, okay? Now let's wait for price to tap into that gap, right? We have swept this high over here inside the fair value gap, and now if you look closely, we have these fair value gaps, okay? So I'm waiting for price to close below this, and as you can see, we closed here, so we have our inversion. So we'll take a short position. We have a high over here, and then I'll simply go for 1-to-2 risk reward. This is going to be the break-even zone, because after our entry, this is the closest liquidity level. So let's see how this plays out. And bam, right there. So you can see that the 1-to-2 risk reward trade was hit. Let's move on to the next example. All right, guys, so here is example number 2. And one thing I want to tell you is that draw on liquidity is not extremely important. As long as you're following this model where you get a tap into the 5-minute or 15-minute fair value gap and you get inversion off of it, you're going to get at least a decent 1-to-2 move, okay? But as you can see over here, we have equal lows, right? And we have taken out the London high, the Asia high, right? And now we have a 5-minute fair value gap after 9:30. So after 9:30, we created this first 5-minute fair value gap towards our draw on liquidity. Now you want to drop down to 1-minute time frame, and you can see that we swept this high. So we have a liquidity sweep check, right? And now what you want to do is wait for inversion. So we have this tiny fair value gap down there, as you can see. So you want to wait for price to inverse that gap. And one more thing, guys, that when we are about to inverse the gap, we should see displacement. It shouldn't be a choppy price action like this, and then we get inversion. That is a low probability inversion, and we don't want to take that. So we have our equal lows down there. Now that is going to be our entry. As soon as we inverse below it, we can put your stop right here above this high. And then you can go for 1-to-2 risk reward. And this would be your break-even zone. So let's see how this plays out. And right there, the full TP was hit. Right? Absolutely beautiful. And I took this trade live with the Discord members. Let's move on to the last example. All right, guys, so here's the last example. And if I go back here, real quick, you can see that we have these very clean equal highs resting around this area, right? So now after 9:30, what we do is we create this 5-minute fair value gap. Okay, so we're going to mark that fair value gap out, and we're going to wait for price to dip into that gap. So right now we don't have any inversions to the upside, and now you can see that we have swept this low. We have this fair value gap. We have our draw up there. So let's see if we can inverse above this gap. Right there, we have inversion. So we closed right above this fair value gap. So we have inversed the 1-minute gap. We take our entry, we put our stop below these bodies, and we go for 1 to 2. So let's see how this plays out. And then this is going to be the break-even zone. So let's see how it goes. Bam, right there. 1 to 2 risk reward hit. Thank you for watching. Hit the subscribe button, and I'll see you guys in the next one. Happy holidays.